Hey guys, thanks for coming back and checking out our videos. I'm going to read a post that came up. I think it's interesting because I kind of shared this with a lot of my staff and other investors who asked a similar question. Would you own one 20-unit building or 5 4-unit buildings? I think it's multifamily. A 4-unit building doesn't require an elevator, doesn't require 24 security desks, doesn't require a cleaning staff or maintenance guys, but they're more expensive to buy, higher initial costs, and it's just 5 houses. Not impressive at all. A 20-unit is impressive, and you can likely get good deals since fewer people will be competing with you, but costly to maintain in the long run. Are there other benefits with 20 units that I don't see? Great question. I'm going to generally kind of talk about it and use some example that a lot of people can understand. When you take 20 units and you 5 4 units, it's 20 units combined. Think of it this way. If you have 5 4 units next to each other, it's okay. But what if there's 5 4 units are spread out throughout the country or the state? Think about it from that perspective. And you have 120 units in one location. So yes, let me give you a Costco analogy. So when you go to Costco and buy a bulk M&M, I mean, it comes with 40, it comes with 80. I don't know exactly how many, but I'm just using as an example. Then it's going to cost you more money to buy at Costco. Why? Because there's 40 M&M in a box. So per unit, it's cheaper compared to you going and buying one king-size M&M at AM/PM or Circle K, right? It's cheaper from a dollar perspective, but per unit is more expensive. So it's a Costco model, Costco to retail model. So think of it that way. The second thing is when you have 20-unit apartment complex in one location, you're going to have a maintenance crew. You're going to have a janitorial. But all the problems and cleaning is within that one compound, 4 walls and a roof. Within that 4 walls and a roof, you have 20 units. Now, if you have 5 4 units, now that's 5 properties of 4 walls and a roof. So now think about it this way. If you have one problem per building and you have 5 of those, real life is 4 units, that's 5 different problems. Now, if you have a 20-unit building, you might have 2 or 3 problems, right? Or even let's say you have 5 problems, but they're all located in one area. So now your maintenance crew, your technicians, or your vendors just need to be on one site to address all those 5 problems versus driving around costing you more money. So for sure, in the long run, it's going to cost you more money to manage. Another thing is if you have a 20-unit apartment complex, it's also going to be easier on your personal life. Why? Because you're going to have a professional professional property manager that might be on site to address the tenant issues or the problems. But now, if you have 5 4-unit buildings and they're spread out, you're going to have 5 different property managers. You can't because it's cost prohibitive. So that means you have to go and manage all those 5 properties. Hey, look, if that's how you make your money, I get it. But can you think about the scalability? If you had to drive around to 5 buildings and address 5 problems or collect rent from those tenants, right? Your all day is gone. You're working in your business. When if you have 120 unit, you could be working on your business. So working in your business versus on your business is different because everyone has 24 hours in a day. So you need to stretch your time. So how do you scale? It's always by leveraging. So when you have a 20-unit building, you'll find out that it's going to be in the long run more cost efficient, easier in your personal life. You can get professional assistance that can be spread out through the building. And overall, it's going to perform much better for you. Because now if you sell 5 4-unit buildings, let's say you want to exit all 5 of them. Well, you could package them all together, but most likely you're going to try to sell it off one by one because it's going to be better returns. But if you have a 20-unit, you're going to have a myriad of investors that's looking at it from a mom and pop 1031 exchange to medium-sized boutique firms. Right? You're not going to get the Blackstones and Greystars to look at it, but you're going to have a bigger, wider investor pool for your sale. So it's easier to budget, it's more cost more efficient. You're going to be able to spread those costs and be able to scale on the 20-unit versus having spread out. So I get it. If you have 5 4 units next to each other, it might be similar to having 120 units because the proximity is close. So that's something that you really need to understand. I personally think 120 units overall is going to be much better. Not understanding the dynamics and the quality and the vintage, but just from practicality and pragmaticness of your investment, if you have the ability with the capital, always go bigger. You'll thank me later. If you found this content helpful, please like, subscribe, and add comments. Thank you very much.